Hi everyone, this is Paul Fouché, Chief Investment Officer at New Road Capital, giving you your April market update. So quite a tumultuous month in April, a lot going on. You had equity markets dipping quite heavily in the beginning of the month on the Trump's tariff announcements. But then when he did an about turn and sort of rolled back on those announcements and initiated the 90-day pause, you saw markets recovering quite rapidly. So first half of the month really is a steep drawdown, and then the rest of the month kind of recovering and even posting gains for the month. So overall, equity markets actually up for the month of April, believe it or not. Local all share having a phenomenal month, up 4.3% for the month of April, and then developed market equities up 0.9% after being down about 10% at one point, and then emerging market equities up about 1.3% for the month, also being down about 10%. Just on that as well, the all share sort of down about 7-8% on the news of the tariffs, and then recovering to end the month up at over 4%. So, this also illustrates the point of not overreacting in the short term to news and shows you how quickly things can change in the markets as well. So you really want to be invested for the long term and think about the long term and think about what your investment goals are, rather than reacting to news and letting the market kind of dictate to you what your investment strategy should be. So, we took advantage. We did buy some equities across the funds throughout the dips, and that served the portfolios quite well for the month of April. So very interesting. If you just look at the month with no kind of path through it, up month. So you wouldn't think after looking at the returns that you had the sort of trade rhetoric in the beginning of the month. As far as that goes, we think Trump has done a 180 on the tariffs. He doesn't admit it, but we think he looks at the markets quite closely, and we know he wants to leave a positive legacy after his term. So we think that that about turn was a direct result of the market reaction, and we don't foresee much tariff rhetoric coming out of Trump. We do still think there'll be some watered down kind of information coming out, but nothing to the extent that we saw in the beginning of the month. And we think that's how he works. He likes to throw out ideas and numbers, and he kind of acts before he thinks. And then, but if he makes a mistake, it seems that he is willing to kind of turn around and go the other way, which we actually think is a positive rather than a negative. So we're quite bullish on the market still. Valuations looking good, and we think we through this noise and looking forward into sort of greener pastures at the moment. So if you look at inflation. Inflation very much under control. Inflation's numbers coming out in the US. Overall inflation down at 2.4%, so very low. And then the core inflation, which excludes food and energy, at about 2.8%. And a big driver into that was actually just the price of oil. So oil ending the month at $58 a barrel. This time last year, oil was sitting at about $80 a barrel. So it's very deflationary. And that also leans into our thesis that, we think you're going to see lower inflation going forward, as that oil price continues to stand under pressure, we think. So all in all, numbers playing out how we, foresee them to be. And pretty positive. So we don't see high inflation coming back. We still see a very deflationary or low inflationary environment. South African inflation, same story. So our inflation now sitting at 2.7%. It's actually below our targeted band of 3 to 6. So we're hoping that we'll see some interest rate cuts soon, because definitely it's very much below the band. And then even if you look at core inflation, which excludes food and energy, it's sitting at 3.1%. So below the band, very much under control, and hoping to see cuts. Obviously some other positive news, the VAT increase obviously being reversed, and waiting to see what the finance minister's new budget will look like, but really a positive for the GNU as well. So, a month of quite a lot of negativity in the beginning of the month, but then both globally and locally that undoing through the course of the month and into May. So if you look at the exchange rates, Rand dollar started the month at about 18.30, weakened all the way to about 19.80. That was on the VAT news as well as the tariff news, but actually ending the month from there strengthening quite significantly and ending the month at 18.70. So, from about 18.40 to 18.70 through the month, but with quite a lot of volatility in between. And that really a result of positive news both globally and locally. The ALSI had a pretty decent month. That's the local bond market, up about 0.8% for the month. So happy with that. And then developed market bonds up about 3% for the month. So, I've mentioned before, we own bonds and developed market bonds in our portfolios as a sort of a buffer to bad news. And they definitely do add some value when you get a bit of noise. So helping the portfolios a little bit. But yeah, bonds up 3% for the month of April, quite a significant and big month for them. So all in all, a lot of noise, still a lot of uncertainty out there. Market's still a little bit, they've recovered a lot, as I say, but still a little bit sketchy. You're seeing some volatility on a daily basis, but we think the majority of the noise is past us. We are focused on the long term. We're focusing on managing the risk before these things happen rather than trying to react after the fact. So yeah, things looking good. And as always, if you need to contact me or any of the team, please feel free to do so. And all the best, and we'll chat soon. Take care. Bye.